Hi everyone, welcome back to the channel. It's been a while since I last posted, but reviewing from the previous trade analysis which I put through, yeah, it played through. So today I'll be posting a new setup for today's analysis. Today we'll be stripping away the noise and focusing on pure mechanical price action. Today we'll be diving how to properly map the market ranges and utilize premium and discount pricing so we can stop buying at the top and selling at bottoms. Today I'm going to show you exactly how to use a simple rectangle to lock in your range highs and lows, establish equilibrium, and wait for a valid break of structure to confirm your high probability entries. And today, just like always, we have a massive watch list to apply to this mechanical blueprint, and I'll be mapping out clean setups across a board of pairs. I'll be looking at the Euro USD, Pound USD, EURCAD, Pound Swiss, especially for a setup which should play out I think by Monday or Tuesday if the market goes very well. And then we'll be checking in on gold and analyzing major indices including JPN 225 and GER40. No indicators, no fluff, just clean charts. Let's get straight to the analysis. So on my screen we're currently looking at the DXY, and this is the weekly time frame. So mapping out your ranges, how do we understand our trading range so we can follow suit and trade with it? So price action is always very confusing because we have too many candles involved and they'll print several highs and lows. How do I want to approach this market and how do I approach it? So I just have a very simple rule which I use. I basically use lines to map it out. I know we have the Fibonacci, and yes, it can be used, which it works very well, and these two can be used as a Fibonacci. So let's head into the charts. This is delta XY, and I'm looking at it on the weekly time frame. So um, when you are identifying your ranges, there are certain things that you have to look for. So the market blueprint range is defining a clear dealing range. We have to establish our boundaries and we have to look for the most recent displacement that swept liquidity and created a new structural high or low, such as this here on the weekly, this and this. These are both clear areas, clear range. This is a range and this is a range. So applying these my lines, I'll be looking at this and I'll be looking at this as a clear dealing range, notwithstanding the major move which occurred originated from this top here. And I have several areas which I would likely look into just in case price gets to those area. This is an area I will be wary of when price gets to, and this is another area I'll be looking out for price too. So first things first, I've mapped out a daily range and I understand that this too is a dealing range too, from here to this area, which is the major swing trade, this area to this area. But right inside it we have this dealing range, and this is a weekly time frame, and we will have sub ranges inside of it. So let's break it down. I would always tell my followers that I use the line charts to get very clear picture of the market, and this is what I'll be looking at. On this I have this swing right here and this here, which if I look at it very well, I have price here and here, and from then up to this moment we still have price right inside that range except when price broke out here. But this is the line charts. On the candlestick pattern we don't have a close above here, so I'm currently not bullish on this at the moment. but we can as well go to the smaller time frames to get clear ideas on what to do on the 4 hour time frame and on the 1 hour time frame, and precisely on the daily too, because this is the weekly. So I'll be going down to the daily time frame. And what do I have on the daily? The daily looks a bit clearer than we would anticipate. Remember, we had our range high here and a low here. So let me bring that up. I would want it to show. Okay, so this is a clear dealing range. On the daily, what do we have? On the daily, it's pretty clear that this is a very strong dealing range where price reacted from. And even the areas which we mapped out, there are still strong dealing ranges on the daily time frame. So let's leave that for now. Let's work on the now and how we should approach the markets. So we know that this is a clear dealing range and we see price coming lower. You see, we don't have anything as such as a break of structure from this area all the way here on the daily, except when price came here and created a new low. This gives us a new dealing range, which is this area to this area. I wouldn't be marking that out because this is in the past. I would want to go to the future. So this area here to here is a clear dealing range. This area is a clear dealing range, and if I were to use the rectangular tool, I would have this here, this as my dealing range, and I'll be waiting for price to come back into it. But I would want to do this in the future, not now, and the future not too far from here. But looking at the current market structure, we know that okay, this is our clear dealing range, and we have a break of structure here on the daily, which makes our dealing range shift on the internal time frame. From here, we have subtle break of structure here. Let me switch this. We have a break of structure right here and a break of structure right here, and this too is a dealing range. After price broke out of here, we see a pullback and a reaction from here. So let's talk about the current latest dealing range that we have. So this is our dealing range, this area to this area. This is our current leg of price action where price pulled up to on the daily time frame. And on this, I'll be having this as low and this as the high. Notwithstanding the area which we have right above here, this is a weekly dealing range. So I'll map this out as my daily range high, and this one here too as my daily range low, for clarity purposes, just to know what I'm doing. Now I'll be going to the 4 hour time frame. Yep, so we're now looking at the 4 hour daily trading range. So which is this is our daily trading range, but we are looking at the 4 hour time frame, and inside the 4 hour time frame we have several other trading ranges, and I'll break them down for you. So when we see price move way high like this and there's a break of structure, it creates an avenue for us to anticipate a price pullback and for price to move back into the direction which we anticipate. On this one, we have a break of structure right here. This is a break of structure, and it led all the way to this high. So how am I going to get the equilibrium inside this range? When I say equilibrium, I mean the midpoint, and inside the midpoint from that rectangle I can always get the premium and discount prices. So I would apply my rectangle to from the high to the low of this particular move that happened here. inside this midpoint here is the equilibrium of this whole leg of price action. So dividing this into two, this is our premium price and this is our discount price, but we just can't take a position or an entry when price comes inside this area and inside this area. This is the 50% of the whole move. We can as well break this down to get a more precise discount pricing where the market would look more enticing to us. So I'll apply another rectangle inside here and then place this. I'll move this right here and I'll place this here, then removing this. So now we have a clear picture of the market on what we want to do on the 4-hour time frame. This right here is our premium price, while this below here is our discount pricing. So this is our premium, while this is our discount pricing. What do we want to do on this market? As traders, we always want to get in on long trades from the lows. We don't want to get in on a long trade from the highs of a particular market, because we'll be getting it at a very high price. This is just like our everyday lives when we purchase commodities. Purchasing commodities, we would likely keep an eye out for periods when promos are being run, so we can get the best price of the market. So in this aspect of the market, the discount, we are anticipating and hoping that this is a promo price where we can get it at cheaper pricing, while this is a higher price. If you're buying, you want to be buying at discount. If you're selling, you want to be selling at a premium price. So this is it on the dollar XY. We have price inside this range, and where is price currently growing? I'll be interested in buying the DXY when it comes straight down to my discount. And there's another tool too which we can use, which is very rampant and we all know it. We can use fib 2. You see it clearly aligns with this area, but just for record purposes, so you can keep it in your mind, if you can apply just this and have this written here as a discount and a premium to give you a clear picture on what to do on the market, it will be clear and way better. So on this, if I'm taking a position right from here up to this high here, I'll be in the profit of 1:3. This is equivalently, this range here is equivalently 3 times of each one. This is 1 and this is 3 of this, which is actually good. As long as I'm in profit of a 1:2 risk to reward ratio 50% of the time, I should be in profit. So this is the 4-hour time frame. We wouldn't just be taking trades just because they are inside here. We need to see subtle changes in character and break of structure to confirm that particular trend. So I'll give you a typical example of that right now. And looking at this leg of price action here, this is the 4-hour time frame. Even on need 2, you can still see some break of structures. So I'll be going lower. Okay, so this is a leg of price action. We have this low here and this low here. So this would be the low that broke the camel's back. This is it here. So I have a dealing range of this to this, and inside that range too, I still have this, and this is the area that changed the structure. And guess what? Liquidity was swept and then it broke a structure. So even inside this range too, on the smaller time frame, this is for day traders. On the smaller time frame, I can apply my rectangular tool right here, and I can still do the same thing which I did. Apply this here. I'm looking for pricing here, for cheap pricing here, and same thing too under here. So we see the way price still came back up to that area, because this is a trading range and we are looking for a cheap price. Now we see price coming for the premium price rather. Now we see price right here, and this is what we have. Although it didn't get to the area, this is where market structure plays an important role on the minute time frame. You need to understand candlestick pattern, and this here is a must close on the 1 hour time frame. With these two candles here, this is a must close. This is a strong candlestick pattern which indicates a strong reversal depending on where it happens, because in this scenario right here we see it's happening at a premium price area. So we can as well anticipate price dropping, and we can as well say, so this is happening, I have liquidity swept all around here on these other candles and price is still closing. This is a sign that the bears are coming into the market. This is rather risky, but the risk to reward ratio is pretty high on this. You can anticipate price breaking this and then leaving your stop loss right above it and aiming for the lows, which should be our main target, even if our stop loss would have been here. But now we've gotten a sweep, and if price should go back to that sweep, then we should anticipate price going higher. But this is a premium price. Now if I had been on this trade, this is a clean trade, and 1:5 risk to reward ratio targeting the lows. That is if I had been on it. So that's that for this. So for my bias on delta XY and what I'm currently seeing on the chart, I'm anticipating price dropping lower to the discount area for me to get interested to look for buys. And while I'm waiting for it, I want to see a subtle change of structure and character, a break of structure and a change of character right inside here for me to anticipate any long positions targeting these highs, because this is a trading range. So that's that for the XY. We'll be moving to the Euro USD, and I'll be working from the daily here. From our daily, it's pretty clear to see that we have a break of structure. That's the first, and we have to determine our daily dealing range. And what is my daily dealing range on the Euro USD right now? My daily dealing range is this area, this high to this low. This is my daily dealing range. This is where the market feels okay, the market participants feels this is where we are trading in at this period of time, until we see a break of structure, a candle closing out of it. Then we'll be convinced that price wants to seek new areas. So applying this and going with our rectangular method, we have our range high and our range low. Then we separate this. This is the midpoint of the premium pricing, and this is the midpoint of the discount pricing. So taking this out, right here is my premium price, and right here is my discount price. So you see, with this it's pretty clear. I know what I want to do when I come to the market. When I come in, I know, okay, if there's anything happening inside here, this would be on the smaller time frame that I'll be looking for subtle change of structures, and I'll be trading it, not to swing it. But one thing I know for sure is price acts, fair value gaps act like magnets, and we would anticipate price going way up here because we have this fair value gap here. But if price doesn't go to that area and it creates a new low with price closing right underneath this low here, then we would have a new trading range. Then this is going to change. Our premium and discount pricing will change. Notwithstanding, this area is a very strong supply area where we would anticipate price reversal. So let's dive into this chart on the smaller time frame. Let me label this as my daily range high, and this is my daily range low. So I'm going to the 4-hour time frame right now. So if there's anything which is clear in this market, we will see that this particular trend we have here, this particular price action we have here, market is going in the channel. And on the 4-hour, we have a different dealing range, which I'll map out. On the 4-hour, this is the dealing range. So 4-hour range high. So that is what we have here, and this daily range low, it's a dealing range here, the daily range low. So what am I looking at on this pair? The price action here is pretty confusing. Why? Because I have this daily range high here and this daily range low, but the 4-hour gives us an area here which we would likely look into, and we have this supply area here, and looking at it from the daily, we had a supply area which has been recently tapped by the market, and that is where price is trading in. So this is it here. We can as well move this down to the candles that swept liquidity, which would be this here to this low before everything here started happening. So we can see price reacting from this area. I'm not saying we can't get trade entries from here. We would definitely get trade entries on the 1-hour time frame, but understanding our market's dealing range plays an important role in our decision making. This is the 4-hour dealing range, but the daily clearly states that this is what I want to do. This is my main dealing range. So if we have price closing right above here, we would anticipate a move higher, because looking at our premium and discount dealing range on the daily time frame, this is our premium price and this is our discount price, and still applying the fib 2, this is our premium and this is our discount. We want to be selling from anywhere around here when we see a change of character or a break of structure. We want to be buying from this area when we see a change of character and a break of structure. And yes, the market has given us several internal change of characters and break of structure on the smaller time frame, which is on the 1-hour. With this, so yeah, we have this, but I would anticipate price breaking here. If price closes out of this area, a 4-hour candle or a daily candle closes right at the top of here, my next target will be this area here on the smaller time frame, not on the bigger time frame, because I want to get on a sell, because the major direction on this pair is bearish. Why do I say it is bearish? Now let's go to the weekly time frame and make this clearer. You see, price has been trading on this. Yeah, this is what we have. A rejection here, a rejection here, and this is on the weekly time frame. So what do we anticipate? We anticipate lower pricing, and we just have had a break of structure right here, and this is a low on the weekly time frame which we should look at, but not yet, because we are looking at the lower time frame. Now look at this, our dealing range from here to here. We have this very important candle which is the supply area, and back to the 4-hour time frame. Where does that align into? Okay, and it aligns right into this area here, stopping right where the order block is that led to the new lows inside here. So I would anticipate price going higher and dropping lower to take out these lows because the major direction is on the low side. So that's that for Euro USD. We'll be moving on to the next pair, which is the Pound USD. And the Pound USD, our daily dealing range, we had this as a dealing range here, this area, this swing high and this swing low. We didn't have any break of structure, but this is rather confusing, but I'll be patient on this. Why would I be patient? I had this as a swing high and this as a swing low. Prior to this swing low and this swing high, a break of structure right above here and then another one here. Now we see this led all the way to this, but I can't find any break of structure inside. I see a sweep of liquidity right inside here and price going right way back here, and price is reacting from this area here. So I really don't have much to say here on the daily time frame. But looking at the 4-hour time frame, the 4-hour time frame is rather clear. I have a dealing range on it, which would be this and this area. This is my clear dealing range on this market. So applying my tool, I could apply just the FIB tool and get this, but just to keep a clear picture and image of doing the discount and premium of what we should do, I would rather do this. So when I come to the chart, I can see that okay, this is premium and this is discount and this is where price is in equilibrium. So I would apply this. Right here and get the midpoint of it, and I'd still do that same thing again and apply this here. So this is my premium and this is my discount. This is my discount pricing and this is my premium. And this is my most recent trading range. Why is this my most recent trading range? Because right here I had a break of structure and it did the same thing too here, it did the same thing too here. So if we see price breaking these lows, we can anticipate lower pricing down to here or any other place, or a sweep of liquidity to move back higher. But at the moment, this is what we have. And where is my supply area, my demand area rather? This is my demand area, right inside it, right inside the 75% area, which is actually a strong area, a good place to take a long position. If price fails to react and on the smaller time frame give a subtle change of character, please do not enter the trade. Wait for a change of character and a break of structure before taking any position. If price breaks below, then price is searching for lower pricing. But this is our current daily deal, our current 4-hour dealing range. And on the 1-hour time frame, what is it that we have here? Yes, and we have this as the last area here. So applying this. So what are we looking at? We are looking at price coming all the way right inside this area and with our stop loss a little bit below this for a sweep, just in case it happens, and we are looking to take this trade here, which is actually a good one, which is 2.35. Yeah, sometimes I leave this right below here just in case there's a sweep, or saving my capital, because the risk is always fixed on every trade. Now this is it for pound USD. Now let's go to gold. Okay, on gold we have a clear dealing range already, and dating back we have this here, and this is a break of structure, and we have this here on the daily time frame, but we had a new break of structure right inside here. So our daily dealing range changes from this high to this, which broke the structure. I'll take this out. So from then on we had all this happening, and this is a new break of structure. But all this happening is still right inside this swing low here, and this other one here, and this high here. So price is currently very low, but due to the current happenings with the geopolitical war and everything between US and Iran happening, gold is rather very inconsistent. So let's go on with this. So what is my most recent daily trading range here? This is my swing high, and this is a swing low, and it took out this structure. This becomes my trading range. This is my trading range high, and this is my trading range low, because that's the area where price led to. So I'll put a label on this, my daily range high and my daily range low. So moving to the 4-hour time frame for a clearer view. It's pretty clear. It's pretty clear, and yeah, on the 4-hour, this is what we have. This is the break of structure. We figured this out on the daily, and we're on the 4-hour. This is the latest swing high and the swing low, but we have a sweep. We had a sweep of liquidity and price breaking an internal structure here. So me being a trader, yes, after I see this and price is currently at this particular level, a discount level, the next thing I'll have to do is to wait for price to come back down into this area so I can anticipate the price. But I know this is my daily range low. So still looking at this, we have price currently here, and from my other analysis we know this is our premium pricing, and this is our discount pricing, and this is our discount pricing. And apart from this, it is pretty clear that we see gold on a downtrend on the 4-hour time frame. So let's apply a tool on this. So this is pretty clear that we have gold squeezing. What do we anticipate for the new week? We don't know. I wouldn't want to get in a position right inside this wedge. I would wait for price to close to the top or to the bottom. But I have a confluence, and I know that price is currently at my discount pricing on the daily time frame and the 4-hour time frame. So if price breaks out of here, it gives me more confidence to know, okay, I will target the highs, which is here. So that's that for gold. And this is EURUSD. On the EURUSD, as always, the first thing we have to do is identifying our trading range. Yep, identifying our daily trading range. And what would be our daily trading range looking at this particular pair? So we had this. So we don't have a closure here, we just have a sweep here, meaning this low is still valid, and this high, which is our daily trading range. This is a range here, but right inside this range we have break of structures. We have this break of structure, and we have this break of structure. Now take note of price, the pullback and back up. Now we have a break of structure and price pulled back right into an area of value where we have an order block. So I'll label this as my break of structure and this too as my valid break of structure on the daily time frame. So what is my trading range? This low to this high is my trading range. So I'm mapping this out as my most recent daily trading range. But I have it at the back of my mind that there's a break of structure and price is currently low at a premium price. But how do I do this? Now let me use the fib tool. This is what the fib tool would look like. If I use my fib tool, I changed it to work to look like this. So we have a valid high and a valid low. And where is price currently? Price is currently at a low. Let me apply this for clarity, so I can always know what price is doing the moment I step into the chart and look at the daily time frame. I have that as my trading range. I know this looks like hard work, but it's necessary. If you apply this on your charts, it will give you a clearer picture of what to do on a daily basis and where price is heading to. So price heads from premium to discount, from premium to discount, creating new highs, just following the market that way. So we have this as our discount pricing, and this as our premium pricing. These are our premium pricing, and we have this as our discount pricing. Good. So these are clearly stated. What next to do? We go to the 4-hour time frame. And this is what we have on our 4-hour time frame. As clearly stated, this is our daily range high and our daily range low. This is the daily time frame, and we have price currently at our discount, and we are seeing subtle changes. What next do I have to do? My 4-hour trading range right inside this range is from this high. My first targets on this particular trade setup, I'm still anticipating it. It's from this high to this low. So I'll call this my 4-hour trading low, and this is my 4-hour range high. This to this is my trading range. Okay, beautiful. So in as much as I have this already, I already have a sweep of liquidity right under here. I can still apply this same method right inside here, and go to the 1 hour time frame. So deep down I know I have a trading range now, and that's for the daily, and this is it on the 4 hour. So what am I looking for? I'm looking for subtle break of structure and change of character, and we're beginning to see something like that right here. So we already have price closing, price closing here, but I won't take this because I want to see a strong candle closure right above it. I want to see like a 4 hour candle closure right above it. I'm not so confident about this break of structure and price reacting from this particular um, area, this particular supply zone here. So I'm patient and I'm waiting. I want to see price closure right outside here. If it doesn't go all the way to the top here, it will still indicate that yes, I now have breaks of structure. If price closes right above here, I will anticipate a pullback down. My target would be my daily range high back into premium pricing, which even if I get a position, even if I get a position inside this area, even if price doesn't come all the way down, because I'll be waiting for it to come back to this area here, this area here. If price is to move all the way up, I'll keep my eye on this. I'm expecting price to fall back down inside here and move all the way up. My first take profit is going to be around this area here. Around these highs with my lows right here. So this is my first trade I'll be taking, but this is the 1 hour time frame. I'll wait for price to go there. When price gets there, I look at the 15-minute time frame for subtle change, candlestick patterns, and a break of structure to anticipate a move higher. We might be lucky to grab this move all the way to the daily range high, which would give us a 1:7 risk to reward ratio. But as well, we all know this is trading, and if price closes lower, we anticipate lower pricing. We don't expect anything. We only want to be on the right side of the market. We don't control the market. We can only anticipate, conduct our analysis, and hopefully it works our way. If it doesn't work our way, we try again and we go another way. So what next do we have on our table? Okay, we have JPN 225, and I think I already have an analysis on it with a clearly defined daily range. This is my daily trading range, and this is premium pricing, and this is discount pricing with our break of structure. Going to the 4 hour time frame, this is my current daily trading range, and I have a break of structure, and price is currently inside here. So if price doesn't close lower, I anticipate price going all the way higher, with this being my first take profit, but I need a confirmation right inside this area here to anticipate price closing here. If price closes out of here, that will give me a stronger confluence that price would be heading all the way higher. We have this too, so we anticipate price reacting anywhere around here. If it closes above, we are going higher. So we have our discount and our premium pricing clearly stated. So we know from here we want to be buying this commodity. From here we want to be selling this commodity. So we have Germany 42, and as clearly stated, okay, I have something on it. So this is my premium pricing, and this is my discount price rather. Good. So this is it for this. On the 4-hour time frame, let's look at the daily. Okay, yeah, well, on the daily we have, yes, on the daily this is a very good low, and we're already starting to see strong rejections with price sweeping liquidity and closing here. So all I want to see is price closing right above here. That would give me a break of structure. So on the 1-hour time frame, that's the high I'm looking at. These are subtle um, um, break of structure to the downside, but when I start seeing price creating higher highs and breaking the previous range highs which I have, I'll be interested in going long on this pair, with my targets being the daily range high or close to the premium pricing. So this is the last pair we'll be looking at for today, and I should have been on this trade, but because it's Friday, I anticipate price opening with gaps on pound Swiss most of the time, so I didn't take a position on it. This is a break of structure, a clearly defined break of structure, and this is my range high, my 4-hour range high, and this is my 4-hour range low, as clearly stated. So applying the rectangular method, so I have my parameters well written on the screen. That's my premium pricing, and applying this, that's my premium pricing where I anticipate price to get to, and applying this, this is the discount pricing. So what do I have currently now? Permit me to label this. Our 4-hour range high and our 4-hour range low. So moving to the 1-hour time frame, this is what we have. This is an intraday setup. So this market is not pretty clear. We can as well break it lower, go lower on the 30 minutes. On the 30 minutes, we see a break of structure internally here, a break of structure, and then we see price doing the same thing too to the upside. So on the 1-hour, we can actually call this a sweep of liquidity and break of structure to the upside. But on the 15 minutes, it's a clear break of structure. And where is this happening at? This is currently happening at our discount pricing. So what do we anticipate? We anticipate price moving from this area all the way to the top. But I'm skeptical on this. Why am I skeptical? Because it was a Friday, last week Friday, and the closure of this is here. I can anticipate price opening way lower first before going to the upside. I'll be patient on this. Either way, price could actually open higher, but I'll be patient on this, and if the market opens, I'll put a pending order anywhere around here to anticipate higher pricing. So this is my view for pound Swissy come Monday. Price could actually go lower, so always trade with confidence, but we already have our confidence right here which we need. If the price doesn't go our way, we try again. Alright, good luck traders. This week I'll be looking at the intraday price action, so I can as well update the community on how I'll be approaching the market on a daily basis. Alright, see you guys on my next video. Have a very wonderful weekend and catch some good peeps too. Do ensure to like, follow and subscribe to the channel for more insightful market analysis from the trader.